Trump did it again. The EU has reached a deal with the US, so the US has reached a deal with the EU. Who's on first? That's the question. What's the deal about? Now, first of all, you need to understand one thing. You need to understand that this is a major deal. Why is this a major deal? It's a major deal because, frankly, the EU is a top US trading partner. And Trump played hardball and he won. I mean, you might like Trump, you might not like him, but he played hardball. He said, listen, the EU is a top US trading partner by a lot, 100 billion, meaning exports is about 600 billion and imports is about 400 billion. He says, you cannot afford not to do business with me. You have to do business with me. And I'm going to charge you 30% if you don't agree. If you do agree, well, let's talk. And they kind of agreed and they got 15% and they say, we won. Who really won? Last year they were paying about 2.5%. Now they're paying 15%. Don't let this stream distract you from the fact that 200 Congress members voted against releasing. Yeah, I mean, that could be a killjoy. I mean, I don't disagree. Don't sound very democratic. Well, no. I mean, Trump is playing hardball, and he told them, listen, it's 30% or it's and I don't think they're ready to fight him on that. And it's a big, important relationship. It's the most important relationship is European Union, Mexico and Canada, and China. But the European Union and these people could not afford to do business without blackmail into doing what they I don't know what you're calling it. He's calling it deal making. So basically, what did the U.S. get? Obviously, the European realized that what could they do? So they have struck a tariff deal which will avert a transatlantic trade war. They were concerned there was going to be a trade war, and obviously they were more concerned than Trump. Now, obviously, the market is going to love this because it's working out. As part of the deal, the EU has agreed to spend. Forget the 15%. They have agreed to spend hundreds of billions of dollars on additional U.S. energy products and weapons in exchange for a broad 50%. So the U.S. wins on both sides because, quite frankly, they used to pay 2.5%, almost nothing. Now they're paying 15%. Basically, the agreement was stuck on Sunday, but I think it happened way before. I mean, this is not something that just happened. They've been working it for a while. The deal marks a victory for Trump, who has spent months forcing America's trading partners into bruising negotiations. These are bruising negotiations. He's not messing around. As long as it is traded in US dollars, they will be reached. They have neglected industry. Well, have you ever gone to Europe and found a Ford, a Cadillac? I don't know, there may be a point there. So today's create basically certainty. I guess the way they're selling it is certainty under uncertain times. Now, don't forget, just 1 second, let me explain to you what's happening here. Because basically, the 15%, I'm going to do a live on that sometime this week, but who is paying the 15%? Because obviously the wholesaler is going to pay the 15% as they're coming into this country. But then, the windmills ruining the ocean. Trump can't see the ground from an airplane. As long as he's trading in US dollars, so everybody doesn't like it. Blackmailed. Wow. Guys, I mean, this is a good deal, technically, for the US for now. Except this. Obviously, someone has to pay the 15%. Are they going to pass it down? And don't forget, it's not really 15%. They will spend an additional $750 billion on energy products and invest $600 billion in America and buy a vast amount of the country's military equipment. So 15%. And he had threatened. Now, don't forget that there's still a steel and aluminum, which was set at 50% on many countries, would not be cut to 15%. So he's still going to collect 50% on steel and aluminum. Europe is in the same work of the third work labor is a cheap bring down the price of consumer jobs to your average Joe. Well, von der Leyen confirmed the EU would seek to purchase 250 billion of US energy. With this deal, we are securing access to our largest export market. Ahead of negotiation, blah, blah, blah. So basically, we did almost a trade surplus will be up 200 billion last year needed to be cut. We have to rebalance it, she said. Okay, she agrees that it was kind of uneven and they wanted to rebalance the issues. So basically, let's take it from the European, right? They're gonna say, well, at least we avoided 30 to 50% tariffs, so that's good. Even though the 15% is still higher than the pre-2025 level, so they mean European exporter face higher costs to enter the US market. Are they going to basically have you pay for it? Enter the US market. Don't forget to subscribe. There's a lot of story on this thing. Second, strategic concession. Europe agrees to large-scale energy purchases, so that's good for the U.S. I mean, basically, what is Trump doing this? He wants basically people to start making the U.S. relevant again, reducing its flexibility of energy. EU 600 billion U.S. investment pledge shift from European capital and jobs to the U.S. potentially spark criticism from industries at home. The people over there, so why aren't you spending on us? What are you spending in the U.S.? Key sectors like aircraft, semiconductors, if you work in that industry, and certain agricultural products remain tariff-free, protecting high-value European industry like Airbus. That's true. However, steel and aluminum still pay 50% US tariffs. This is going to be a lot of damage for these people overseas. The deal gives Europe predictability and stability. So basically, they had a gun like that, and they say, okay, fine, whatever you want, just leave us alone. And that's what they did. Now, on the European side, that's going to be a lot of damage, lots of damage. But that's because, frankly, they could not get together and they didn't want to go into a war with Trump, which Trump was ready to go to war with them. And basically, some U.S. trading partners have expressed concern that even when they strike agreement with Trump to lower their tariffs, they face uncertainty over future American levies. What is going to happen after? That's the question. And Trump is going to do it. And why is he doing it? Well, he's doing it to basically, I mean, he's going to collect even more money. You people have been living on tea of America for way too long. Well, I mean, there's a new sheriff in town. But how are those prices going to be reflected within the U.S. industries? That's a concern that everyone has. Will this impact prices? I mean, don't forget, 50% tariffs on steel. Basically, you're basically saying that steel is close to Europe. Basically, that's what it means. What this also means, quite frankly, is lots more money coming into the U.S. coffers, yes. But that also means that some of the stuff that's coming in are going to be very expensive. 15% is likely a new minimum tariff level for most American trading partners. Most everybody agrees that this level will have an effect on companies' decision and are expected to contribute to higher prices for American. Someone is going to have to pay that 15%, unless it remains at the level of the wholesaler and the Europeans are paying it, and they say we don't want to pass the prices to you, because then that would make too much sense, right? Because I mean, yeah, the US is going to collect 15%, but you're going to pay 15% more. Britain and France had been doing the job since 1914. What did they say about natural gas? Well, basically, they're going to be spending. European deal comes out of free recent trade. The deal with this anxiety, blah blah blah. But basically, it looks like it's 15% plus it's 750 billion LNG and nuclear fuel, reducing its flexibility in sourcing energy. large-scale energy purchases from the U.S. Plus another 600 billion of U.S. investment pledge shift some European capital and jobs to the U.S., spending the money into the U.S. It's not just us that save Europe, it's also the English people, the Canadian people, and a whole lot more. I mean, my friends, this is something that was in the making for quite some times, right? Why did Trump decide to do this, right? He did it because he says, you know what, that's what he says, but you've been taking advantage of the US for too long. But again, be careful. What I always say with Trump and the administration is don't listen to what they're telling you, listen what they're not telling you. What are they not telling you? Right? Yes, they're going to pay 15%. Can he guarantee that 15% is not, and don't forget, it's not just European goods. It could be if a US company has a plant overseas in Europe and is bringing the stuff off, they have to pay 15% also. So that's going to be considering the tariff. You have to wake up because it is a customer that pays a tariff. Well, I mean, if that's the case, then basically what we're saying is, because right now, and I'll talk about it later on this week, it's the companies right now that are paying the tariffs. For example, there was some news on GM, for example, that was complaining. Let me see if I could find that for you. But basically, GM was having some issues because they're the one that are paying. Basically, Trump's tariffs are being picked up by corporate America. Neither consumers nor foreign countries are assuming much of the tariff burden, at least not yet. Why do you think recently, what did I hear about? I think it was GM and Nike are absorbing much of the cost for now. In a competitive market, a company that hikes prices could lose market share to a rival. So they're not raising the prices, so they're taking in the chin. Many are reluctant to raise prices until they absolutely must do it, until they know the ever-changing tariffs are sticking around. Right? Because if you keep raising the prices and lowering the tariff, you don't care. All you know is the stuff is 15% more. I'm not buying from, I'm going to buy someone that's not raising the tariffs. And it's not high enough to make such a huge difference for you. I mean, $1.15. But if it's a car, it could be more money. But then again, is GM importing a product from Europe? Not really, but they import it from other countries, Mexico, for example. Now, of course, as the US has struck a deal with Japan for 15%, it did now 15% with Europe, so that's going to kind of level it off, right? So we're talking in 2024, the US was making 40 billion as of July. Now they're making almost 100 billion as of July. So we're talking about $200 billion more. This is not nothing to sneeze at. On top of that, these people are making commitment to spend money in the US. That's what you hear, right? But what you don't hear is, but what happens when everything settles down and the corporation that paid the 15%, and now that everybody knows exactly how much they're paying, now they're going to pass the prices on to you. Slowly, quietly, right? Fools are in charge. I can't think of any country that's having it a good at the moment. No, well, nobody's having good at the moment because Trump went in there and broke the mold. He says, no, you got to stop paying. I say, well, we never did. You used to pay 3%, I pay 3%. He said, but that's not fair. Again, don't listen to that language. It's not fair. Listen to, I am now collecting 200 billion. And that is the technique, and that is the policy, and that's a strategy that he's been using. You're listing over here what you should be listing over there, right? He told you that basically what I want, nothing wrong with it, right? It's just it's a strategy. He's basically saying, you know, we're spending too much money, 2.5 is not enough, jobs, and we want to build America and blah, blah, blah. So therefore I need more money and you're going to pay for me. And meanwhile, I'm collecting $200 billion this year. Now, of course, he's telling you that right now what's happening is they're going to pay 15%. What should you be listening to? What is really going on? Well, right now, he knows very well. I mean, these people are not stupid. They know very well that the corporations are taking in a chin right now. And when everything gets stabilized, then it's going to be a different story. I am sure the Romans and British thought the same of them. Like, the fools are gone, Joe. What happened when it gets passed down? But by that time, right, everybody would have forgotten about it. Everything would have been simmered down, and the prices will slowly sip through. 15%. It depends. Again, when they say, for example, that they're a little bit concerned as to what's happening and they want to know, is it going to be 15%? Is it not going to be 15%? What they're saying, like for GM, for example, is hesitating in raising prices because that's going to be confusing. One day your car is 10,000, now it's 11,500, and now it's back down to 10. How could you protect your brand? You can't protect your brand. You're having issue. It becomes more difficult. So what do? You wait. Okay, fine. We'll take in the chin for a while. Basically, that's what happened with GM, and I think Intel's having some issues. But General Motors said this week that they paid more than $1 billion in tariffs on automotive imports, not from Europe, but the company hasn't implemented wide-scale price increases yet. Stellantis, the Netherlands parent company of US brand Ram and Jeep. The Jeep tariff on automotive import cut $350 million from its bottom line. They say, okay, fine, we'll take it in the chin. But when everything settles down, we're going to have to pass it down. But by that time, the story is gone, right? Right now, they don't want to do it because, especially in Europe, because Trump will say, whoa, wait a second. I don't want my people to pay for that. At least not now. If we get so big and powerful, we'll fall from the inside. Not in my lifetime, but you can't say America is going to superpower in 1,000 years. No more American drama, but American drama. Listen, that's what it is. And this is why this channel is important, because I want you to subscribe to this channel to at least keep up with what's going on, but not so much the news of it. I mean, you're going to hear the news over and they're going to tell you 15%. What you need to understand is, what does it mean for you? What it means for you right now, it's 15%. It doesn't mean anything for you, technically. Right now, it doesn't mean anything. Although if you're in the stock market on Monday, it's going to create stability. So we're selling stability. We're selling comfort. We're selling no trade war. I mean, that's what they're selling in Europe, but they're going to be pissed. On September 10th in France, they're closing the country completely because they owe so much money and they don't know what to do with it. And they don't want to have their expenses being cut and their healthcare and all that. Right? So now we just announced that $600 billion, instead of investing in Europe or whatever, is going to America. But that's what happened when you have a country of 26 people involved. Now, for the US, for you, my subscribers, what this is going to mean is, for a while, it's going to be great. It's going to be good for the stock market. But at some point, that cost is going to be passed through. Now, because don't forget, take a look at like GM, right? Where do they get their parts from? Not everything is made in the US. They're going to get it from Mexico. Maybe they get some wire, whatever, from Europe, or some leather, whatever. That's going to get taxed 15% here. On average, all the tariffs have been going up a lot. So that's hitting from everywhere, right? So those companies are going to get hit. If you own GM stock, if you own all these companies, they're going to take it in the chin. This is a tax. I mean, regardless of what it is, either you pay it at the corporate level, so GM stock is going to get hit, or they say, enough hit, we're going to give it to you. You're going to get hit in terms of inflation. And be careful now. We're playing a two-sword, double sword kind of thing, right? It's cutting on both sides. What do I mean by that? We also want lower rates. And everyone is saying, but it cannot work. No, the reason it's working right now is because, just like GM is doing right now, they're not passing on the cost to the consumer, because it would be confusing for you to see all different kind of prices, 15%, 30%, 0%. So explain growing pain. How do you speak in biblically? Well, maybe it depends on who fakes it or from Trump. No, right? What's going to happen, you're going to have all these people that are basically, okay, now that it's simmered down, my view is that when everything simmers down, then they're going to start raising prices. Of course, it's going to be just at the time, because so far Trump is getting his way, he's going to get lower rates. Of course, politically speaking, if you're the new guy coming in, you say, well, I mean, I'm not seeing any inflation in the numbers, or not huge inflation. So what's the big deal? Let's lower the rates. If he gets me the job as a Fed chair, why not? Maybe that's what Whalen is thinking, the governor over in, because don't forget, this week is a big week. August 1st, so it looks like it's going to go Trump way. And also at the end of this week, the Fed decides what to do with rates. Major announcement, major announcement. Why? Because if Powell decides not to do anything, don't forget, Trump is super powerful now. After a deal like that and everything that he's done so far and the market being up, no one is going to stand in his way, including the Fed. So he's going to have to quit. Or he's going to have to say, okay, lower rates. And they're going to say, you're bowing to Trump? So you're not even reliable anymore, because we haven't seen any numbers that warrants lower rates, because inflation went up from 2.4 to 2.7, technically speaking. Not a huge 2.7, but it is 2.4 to 2.7. So what do you think he's going to do? I mean, and if he doesn't do anything, then you're going to say, what? Oh, come on. You raise the rates, right? You didn't raise the rates in 2021 when you were supposed to, and you admitted that you were wrong. Then in 2024, when Kamala was going to become president, you lowered the rates. And now for Trump, you're not raising the rates, even though there's no inflation. It's going to be tough for him to argue the point that he's still relevant, right? So that's going to be a problem for, it's going to be a big problem for Powell. And then the worst part of it is there's going to be a dissent at the Fed. 2 of these governors out of 7 are going to say, no, we need lower rates. We're dissenting. That will be the first time since 1993, on top of Trump, the building and the paper and all that, he's going to get also a problem with the dissent in the first time in 1993 with 2 people. Not the first time with 1, but 2. There's never been 2 Fed, because if the Fed is like that, the idea is to have 12 people, smart people saying rates are this and this is what we want to do. There's no dissent. But once you have 2 dissent, never happens in 1993. America got a lot of countries, they're pretty to prosper, and now it happened was America got betrayed. Well, that's the speech that Trump is saying. But at the end of the day, what he's saying is that the U.S. cannot continue not to build anything, because that's what's been happening. The U.S. has been exporting its most valuable commodity, and the valuable commodity has been the dollar. And that's what the dollar needs to be relevant. Everyone talks, but they get proved wrong always. A lot of them are third world. Yeah, I mean, Matizzo is right. So you got to be careful. You have to be careful that at some point, all these chicken comes to roost. And of course, like everything else in life, when something is really, really good, everything works really, really great, you wait for the second. You wait for the second act. And the second act, I mean, I don't know where it's going to come from. My concern is that this Ghislaine Maxwell thing is going to be a potential problem. If it's not, then inflation is going to be a problem. If it's not, then it's going to be probably some geopolitical issue, because it's going to come from somewhere. Why? Well, it depends what your concern is. If you're thinking about the stock market right now, the stock market is extremely high. And as long as you keep getting news like today, it's going to be fantastic. But at that level of valuation, the market cannot afford any mistakes. Simple as that. So far, you gotta admit it. I mean, you may like Trump, may not like it, but I mean, he's hitting on all cylinders. I mean, he's coercing these people, and I think, it's a little bit like when he first got elected. Originally, he came in and people were making fun of him, coming down the escalator and blah, blah, blah. What is he talking about? He's ridiculous. He doesn't make any sense. Well, it's never going to work the way he wants it. And he surprised them. You say, what is he talking about? He's talking about John McCain the way he does. You know what he said about John McCain originally? He said, well, it can't be that good. If he got caught in Vietnam, people say, oh my God, I can't believe he said that about, and he got away with it. And now he's telling everyone, telling them, and Canada better be careful. Canada better be careful. We are 2 times GDP with stock valuation. It never got much than this. I mean, right now with the valuation being so high, you need earnings to come in. You need GDP to catch up, so at least it brings back valuation, which is possible. But if it's going higher and higher and higher and higher and higher, at some point it's gonna. So everyone underestimated Trump. And this time around, when he said, I want 30%, he says, you gotta be kidding me. They used to pay 2%. They're not gonna pay 30. Yes, they are. Okay, 15%. Still 7 times more than they paid last year. So I'm pretty happy about that. And that technique is working. But of course, the world is in such a way that if it was that easy, everyone would have been doing it. And the reason no one has done it is because they know what comes after. But then again, Trump didn't have much of a choice. He doesn't have much time. He doesn't have time to negotiate 3 years to negotiate like the NAFTA agreement. He needs to do it now. He needs to decide right now what to do. And what he decided is basically, you know what? Let's do it. Let's do it now. What do you mean, let's do it now? All of it? All of it. I want 30%. I really want 15%. Again, look at my right hand, 30%, but I really want is this. And that's what happened. But then again, Trump is no fool, right? The US is 25% GDP of the entire world. This is the first time the US kind of, moved around and showed the weight and pushed and tugged and coerced people into doing things. Now, of course, the long-term implication of this is that the countries are going to wise up. They're going to say, how long are we going to pay 15% for? Well, pay the 15% because we don't want to go bankrupt. But then let's start looking for other ways to where we're going to sell. The only thing Trump, this is heavy duty, said that where I cringe a bit when he talked about McCain not getting caught. Yeah, it was who gave us Obamacare. I mean, that was a ballsy move to do that, but that's what he does. But then again, Trump is not a very emotional person, believe it or not. He's all business. He doesn't laugh that much. I mean, you think the way he talks over and over doing the same thing. I mean, this is a great technique because people are all emotional. Look how he was with Powell, and he was talking to him, and the guy was all frustrated, and no, there's no 2 buildings, there's 3 buildings. You're lying, and people say, oh, Trump made a mistake. No, he doesn't make a mistake like that. He knows it. He's just putting pressure on him. He wants to pressure him to quit. I'm telling you, if this guy quits, then Trump is all powerful now, and no one is going to go against that. Of course, when you're that powerful, you have to be careful how you use that power, because if you use it too much, if you're too greedy and you go too far meaning give me my lower rates because now I deserve it, I demand it, you owe it to me for what I've done because I haven't made any mistake and I'm right all the time. That's going to be a problem. Because you cannot have high inflation, that is a fact, and lower rates. But the guy that wants to become the next chair, who's the governor and who's probably talking right now to the other governor that wants lower rates, and he's probably going to get those lower rates. That's going to be a lot of damage. That's going to be a problem. Now, of course, what the European is saying right now is, you know what? Give him what he wants. And then we're going to start finding ways around him. Because suppose next year he wants 20% or 25%, because if, or what's going to happen is, and it's probably what's going to happen, but it's not going to happen like that. It's going to happen very quietly. For example, right now, what's happening, and that's a fact, okay? Amazon has been raising prices on 2,600 items. But you probably didn't notice it because it's very small. What's right is right. Barry says, what's right is right. Whatever comes after will come. Well, that's true. We're just talking here. But what we're going to find out very soon is that right now they're going to go for the low prices, right? Which nobody notices. And eventually, when it comes to cars, and I understand why GM is not raising prices. Well, because I mean, don't forget when they market the cars, they don't want to come out as too expensive either. Especially if Trump says, you know what, never mind. What was the point of that? We pass it on to the consumer for no reason. We don't want that either. So we need consistency. So in the meantime, we're paying. We're paying. And these are some of the risks that you need to consider. And this is what this channel is about. And this is why I want you to join the channel so we could go over. I mean, this is an unusual live that I do, but I had to talk about it because it's 15%. Everybody's going to talk about it, and people are going on Europe. Europe does not like this at all. Even though they say, well, at least we have. Basically, what they're going to say is, at least we didn't pay 30%. That's basically what they're saying. Trump is saying, I got 15%. I got 600 billion of this, and he got another 500 billion. Now, of course, this is what you're hearing. What is actually going to be done with that money is what you need to follow up, and that will definitely follow up. Like I'm going to have a call this week regarding this, I think this 550 billion that Trump is being given by Japan, which is basically a slush fund, almost like a fund for him to do whatever he wants to do with it. That's unusual. It's a payoff almost. Yeah, here's 600 billion, spend it whatever you want to. Meanwhile, just give us 15%. It's a payoff, right? I mean, a president has never been given money to spend however he wants it from another country. I mean, he's not going to take it for himself, but he's going to be spending whatever he wants to spend it on. It's almost like a sovereign fund. He's going to be competing with Blackstone. It's amazing. That's what's happening. Now, the thing that we need to worry about is all the risks involved right now in the country. Right? Countries risks that are going to impact your well-being, your stock market, your job, the economy. Number one, the economy is doing great so far. Stock market overvalued. Point number 2 out of 10 points. Number 3, the dollar. The dollar is weak, and is weakening as we go along. Why? Because people don't want the dollar anymore. Except now with Trump, he's saying, no, people want the dollar. Look, they just spent 600 billion. They're going to spend 600 billion in the country. So they want it. It worked. I mean, don't forget that in 1970, basically, Richard Nixon did that. Richard Nixon did that. Richard Nixon did actually do that. He actually managed to say to the world, we do not need to back up the dollar with gold anymore. And it worked. And it looks like the tariffs are working for now. Powell, we're going to tariffs, so that's happening right now. I think is great. Number 5, Trump versus Powell, that's working great. He's going to be out very soon, unless he's got to lower those rates. And if he lowers the rates, he's still going to be in trouble, believe it or not. Iran versus Israel, that's a bit of a problem right now. Israel is a bit of a problem because a recent article basically stated that the U.S. is a bit flustered with Israel. Why? Because Israel is not listening to the U.S. Israel is doing what it wants to do. Israel meaning Netanyahu. Why? Because as soon as he stops, he's going to be in trouble with the law. And they want to arrest him. But I'm not arrest him, but they want to put him on trial. Lost a job, I had to get my own health care, $200. Yeah, well, that's a problem. I'm sorry about that. Then, of course, we had China versus the U.S. China is paying 50%, and they're happy. And inflation is on the watch. So I think what's happening right now, everybody's going along to get along. But in the background, right, they're saying, let's push it down to the retailer. And is the retailer going to pay? That's the question. Because basically the wholesaler is paying 15% to GM or whatever, and then GM takes it in the chin. Because sometimes GM is the wholesaler, U.S. company. Because they're bringing stuff over from another country. So what's happening is you're not seeing it right now because everybody wants to everybody wants to stay quiet because it's too disturbing. Remember, all these people have jobs and they want to keep those jobs. If you're GM, you don't want to start hiking prices all over the place. That is a very tough thing to do. Therefore, you need to understand what's happening. And that's why I want you to join this channel, because we're going to be following all of these items over and over and over. And this thing is happening all the time. Canada, for example, you better start worrying. Because Canada, Trump is going to renegotiate the North American trade agreement with you. Why? Because right now, even though they're paying 15% or 30%, it doesn't make a difference because most of those goods are exempt because it's part of the North American trade agreement. But now he's going to come back to Canada because he hasn't forgotten. Not very nice, Canada. He's going to go after Canada as well. He's going to renegotiate that. And Canada has no choice because 75%, in fact, you know what? He may not even need to negotiate because they may say, okay, fine, we'll give you the 15%. Don't even go there, right? We'll just sign a new one and 15%, we're good with that, no problem. 6,000 deductibles, so lots of discussion about deductibles. Yes, I don't know too much about that. And then, of course, you have Russia. Now, I think that the Trump party will end, unfortunately, with two culprits. And you could see it because these are things that he cannot control. The first one is the MAGA people. The MAGA people at some point are going to be tired, right? Especially through the Maxwell story, the Ghislaine Maxwell story. That could be a problem. And if he goes back with the Israel thing again and in Iran, the thing is, I don't think Trump will be able to help himself. He's on top of the world right now. He doesn't have that much time, so he's able to take risks, gamble, right? He literally gambled to these people who would actually say, okay, fine, I don't want to pay 30%, I'll pay 15%, and I'll say thank you. And they're probably saying, listen, pay the 15%. The devil is in the detail. How long is it for? How long does the 15% for? What will happen? How long it lasts? Who knows? But I will say one thing, that Trump, the reason why he did it, at the end of the day, it makes sense, right? Because you do want to bring the business back to the U.S. You want the U.S. to start being relevant again because it was slowly but surely becoming irrelevant. All we had to do, all the U.S. had is basically export the dollar. And maybe now people don't want the dollar anymore. They want something else. And then, of course, if they start to, and that's the danger, and I'm sure they're doing it, they're probably looking at each other and saying, listen, do we need to pay 15 to 20% of this guy or 50%? Can we do it? Because now that if you're Europe and you're paying 15%, okay, now China tells you, maybe I'll buy your stuff for 5%. Is that possible? I don't know. If you make it expensive enough, it could become possible. And because, tariffs and trade should not be politically driven, should not be trifled the way it has been trifled. But again, in the 70s, when Nixon said to everyone, you know what, we don't need gold to back up the dollar. And they say, oh my God, what are you talking about? And of course you don't need. If you remove the gold, and so that free up to the US to print lots of money, and of course create inflation in the meantime, right, in the 80s, see the inflation? It worked. And it made the US a superpower. And I think that's what Trump is doing right now. You just remember one thing. After the 70s, when the gold was removed from the dollar, there was a huge amount of inflation, a huge recession in the 80s. And everyone is concerned. Everyone is very concerned, including me. I am concerned that at some point, all of these people, all of these risks are going to come to risk at the same time. Don't forget, you have a huge amount of risk. You have a huge amount of debt. The U.S. owes $37 trillion, and as long as the U.S. is relevant, I think what's going to happen, and you could see what's going to happen, right? Now that you've pissed everyone off, and now you're collecting your money, enjoy yourself, great. Now that you've collecting the money from everyone, who's to say that these people are going to do business with each other? Because now they know the cost of doing business with the U.S. Before, there was no cost. But then again, you could understand Trump. Well, okay, so what did you want me to do? Keep doing nothing? Charge zero, okay? So now we don't make our own medicine. We don't make our own, nobody's buying our stuff. our stuff, right? Nobody's investing in the U.S. Yes, Biden trying to do the what is it, the Chip Act, but that didn't do much of anything, right? It wasn't strong enough. So what do you want me to do? Just sit there and let it happen and have the U.S. become irrelevant slowly but surely? BRICS becoming more powerful, and all we had to do is threaten, because that's what Biden did. He basically threatened Russia with the dollar, basically. But that's not good. That is not going to all from your basement. Healthcare is right because those who pay are also paying for those who don't. Listen, this is all about, this thing is called black swan. What is a black swan? What are we discussing all these things for? We're discussing these things because we want to look for the black swan. We want to look for the thing that's going to collapse everything, because everybody keeps talking about that this whole thing is going to collapse, the market is going to crash, the economy is going to go into recession. Even not me saying it, was the head of JP Morgan. They keep saying recession, recession, recession. Oh my God, Trump is coming. Look what he's doing with the tariffs. It's going to get even worse. We're going to lose this country, blah, blah, blah. And look at this. It's working. Of course, some people that don't like Trump are totally pissed about that. But I think what you have to look for is not the news, not the feeling that you have towards Trump or against Trump or whatever. What you need to understand for yourself is what is going to be the impact. What does this really mean, right? Is the market overvalued? Yes, it is overvalued. Do we have inflation? Not really. Well, we're supposed to have inflation. All these economists say we're going to get inflation. Well, yeah, but where did they say it? On Bloomberg? Bloomberg doesn't really like Trump. CNN, they don't like Trump. A lot of these papers don't really. Does it mean that Trump is correct? Well, I mean, what's going on right now? Now, the thing you have to be careful about is not so much what has happened. We need to find out, and this is what this challenge is about. We need to find out what's going to happen next before it happens. Can we have a crash this week? No. This is going to be great. Today you should put options. Well, probably a little too late because the market, it's already the options for. I should take a look at it for you, but options on the S&P 500 or now all these are probably gone up quite a bit. Why? Well, because it's great news. I mean, the market is going to love this thing. If I look at some of the latest information, I think it's going to be great. The only thing is, going forward, what do you think? I think the Dow Jones was up 200 points. The Russell is up 0.20. And what I would say also to you is I'm seeing news right now that investors are basically looking at cheap stocks, and I would not invest in the stock market, but what I would do is I would look at the cheap stocks. That's what you want to do right now, because you have to ride this wave, but you have to be careful because eventually that stops. How does it stop? Well, it's simple. The same way GM didn't want to raise prices, and right now Amazon is raising prices. I mean, pricing is going to go up. They have to go up. Unless GM, don't forget, once the GM is paying 15%, Mexico, I mean, they're getting the stuff from all these places. A car is not made of one part. It's like in a technical car, a usual car is about 15,000 pieces. I mean, put together. I mean, that's killing GM and some of the other company. Maybe not Tesla because they're making a lot of stuff here, but that's going to kill them. So at some point, the price is going to go up. So from a perspective for you in terms of risk, what you have to worry about is, are we going to have inflation? Yes, you will have inflation. When? The thing is, that's the difficult part, is that you don't know when they're going to pass the cost on to you. Why are they not doing it now? Because it's too cumbersome. They're not selling lollipops. They're selling us something that has 500 parts. It's very complex. And they're selling something that is very expensive. And if it's very expensive, and they raise it impacts their not so much their margin, but they're going to say, oh, GM is too expensive, right? You don't want that. So you have to wait. You have to take it in the chin and you have to pay. Now, does Trump know that? Of course he knows that. But what he wants to collect $200 billion, and which he has. And then he could turn around and say, look, if you keep collecting 200 billion a year, in 5 years, that's $1 trillion, right? 5 years, in 10 years, right? We're talking 200 billion a year times 5, right? In 5 years, he collected $1 trillion. That's not too bad. So we could pay for and we're gonna have to do a video on the big beautiful bill because the jury is still out. Looks like it's 50-50. Half of the people like it, half of the people don't like it. Of course, 70% of Democrats don't like it, but then that you realize it's politics, obviously. And it's important. Why? But because elections are coming up next year. What is this going to mean? Basement talk for basement level investing. Wow, that's cruel. I will tell you one thing. First of all, the first thing I would say to you is this. No one can predict anything. And what people should be focusing on, if they want to know, I'm still go back to my favorite philosopher, which is Socrates. And basically it says, I know that I don't know anything. So the way you should manage everything, you should manage everything in a way that basically you protect yourself first, rather than trying to make money. So right now, what you should be thinking, if you want to invest in the stock market, I would stay away from Nvidia because 4 trillion is too much. You want to buy. I'm not saying buy stocks that are gonna go up, but more because this house of cards at some point comes down. You want to buy stocks that are basically not gonna come down as much. Ew, who wants to hear about that? Who wants to hear that I'm only going to lose 20% instead of losing 50%? That's a mentality that you need to have. Don't have the mentality, let me look for the next Amazon. Let me look for the next stock that's going to go 100. No. First of all, you will never find it. That's first of all. Second of all, even if you find it, you're not going to keep finding it all the time. That's not possible. So by definition, you will lose money in the stock market. Why? Because it's impossible to predict it. In fact, I will tell you right now, the reason I'm saying you lose money in the stock market is that 80% of the portfolio managers do not beat the stock market. Buy stock in large, diversified investment, firm, manufacturing, and sales outside you. Well, I'm not saying don't invest in the stock market. You have no choice. You need to invest in the stock market, but you have to invest in the stock market knowing that at some point, right, inflation is going to kick in just at the same time where rates are going to be lower. And then it's going to be a different topic altogether. And then Trump will be gone. And then you're going to realize, oh my God, what have you done? And then they're going to start looking, oh, but we owe $37 trillion. The thing is, with rates being so, what you have to watch for is this. Watch the 10-year yield. Okay. Nvidia is the cheapest stock in history, I was told by my 15-year-old nephew. Exactly. $4 trillion. The stock went up. Am I incorrect in saying that Nvidia was up? Okay, let me make sure because this guy's saying basement investment. I'm sorry, Nvidia was as low as $88 in April. And now it's 100. This stock went up 100%. And the P ratio of this stock is 55. Well above the average 37 or 25. Okay, so it's too expensive. Yeah, I know, but it's going up, so let's go up with it. It's too late. What you should have done, you should have bought it at $90, yes. And I always said take a look at all my videos. I've been making that for 3 years, so I think I have an idea what's going on. But basically what I'm saying is that you buy when everybody else is selling and you sell when everybody else is buying. That's what you know. Did you find anything wrong with the CBO analysis in the last US budget plan? The CBO said, of course, he's talking about the Congressional Business Office. The Congress Business Office is supposed to be impartial, although a lot of people saying they're staffed with hidden Democrats, and they're basically saying that this bill is going to cost $3 trillion, and it's not going to be good. And Trump assumes like 4% growth to pay for this new bill, which is almost impossible, right? I mean, I've seen the charts. I mean, you have Trump at 4.5%, everybody's like at 1.5%, 1%. Why is he exaggerate? Who cares? He's not going to be here to look at it, but you will. I bought 70 shares of Blackstone at 125. Somebody's pushing stocks. That's not the idea of this thing. Don't look for the stock that's going to make you rich, because as a group, my subscribers, you're not going to achieve it. It's impossible. Why is it impossible? Because nobody beats the stock market. Nobody beats the stock market, and you know why nobody beats the stock market? It's simple. Because it's impossible to predict. Why? Well, I tell you what, if somebody was able to predict, they would have made money. There's a guy that made money in the stock market. Look at him, Jim Simmons. Right? He's worth, well, he died last year, but he was worth $40 billion. But he didn't make money. He didn't make money by picking NVIDIA and Amazon. No, he made money, which is the way you're supposed to do it, really, by buying slivers of stock, slivers. I mean, $1 million tranches, but enough to make it. Basically, he's arbitraging two stocks in terms of their risks. And the thing is that he understands the risks, and he's able to price the risk. And that's what I want to do. That is why I have this channel. I want you to understand how to price risk. Not so much to price to make money, but to understand that where's the risk going to come from, right? So if tomorrow morning you say, oh, well, look, I'm opening the news. In fact, if we look at the news right now, I mean, the news are fantastic. The biggest news is Trump and EU reached tariff deal avoiding trade war. But that's positive. This is great, right? So the market is going to go up, so I should be investing. And rates are going to go lower. Yeah, of course. But for how long is that going to last? How long is that going to last? What you should do is you might want to think, because you heard it here first, I mean, don't forget, okay? I want to repeat myself one last time, but I'm following almost 10 risks right now, okay? We're talking about the economy, the stock market, the dollar, the tariffs, Powell, Iran, China, inflation, Russia, and the national debt, which is pretty high. You have all these risks. You telling me all you're doing is you're looking positive in the future? No. There's no free market or competition between corporations. What you need to do is you need to say, okay, what if this guy is right, and what if something does hit, goes sideways? The biggest risk that I see is that Trump loses the MAGA power, and therefore he's not able, especially with don't forget there's election next year, and if he loses that, that's going to be a lot of damage. And what happens then? He loses power. And what happens then? GM is going to say, okay, the 15%, I'm passing it down to the consumer. And who knows, some of these countries may renegotiate, or they say, yeah, I know I was supposed to send you $600 billion, but you know what? Yeah, it's coming. Check is in the mail. We didn't sign anything. I'm not doing it. Oh, you want to do a trade war? Then go ahead. You're going to make things worse for the U.S. You're already in trouble already to begin with, and you're going to make more problems. You know what I mean? And that's why, have you ever taken a course in partial differential equation? Here's a quant guy right there. Okay? So what you want to do is you want to make sure that you know that you're protecting your portfolio, protecting your job, because we don't have a recession in the cards. I don't think you're going to have a recession in the cards for a simple reason is all the Fed needs to do is pump more money in the economy, which they're doing right now, by the way. The M2 money supply is very high. So therefore, we are flush with money everywhere, not low rates. And you have to stop thinking that low rates are coming back, because they're not. Those days are finished. You're going to have inflation, but it's keeping things up, right? So you want to protect your portfolio for next year. Depends when you're retiring. Depends. If you're retiring next year, be careful, because this thing, this is a high wire hack here that Trump is doing. And he's winning right now, but And don't forget, this guy, that Ghislaine Maxwell, running around Washington, pretty soon start talk and saying things that nobody wants to hear. And who knows where that ends up and what he says and what she's allowed to talk and what kind of deal she makes. There's a lot of, we never at that level. You thought about the first Trump administration was a high word act. This one is even a higher one, because now we're dealing with not just the US, as you recall, now we're dealing with the entire world. Bush collapse of 2007, Reagan recession, exactly, right? 1980, recession, 1990, 2007. What happened? What caused the 2007 crash, right? What caused that stock market? You need to, over and over and over, there's basically six reasons that cause a stock market crash. Economic shocks, a recession, which we don't have, high inflation, not now, but sharp interest rate hikes, not now, so we're fine. Financial system stress, like excessive leverage, we have that. Asset bubble, we have that. We do have the I did this live this morning, and I was talking about the fact that prices are extremely highly elevated. Liquidity crisis? I don't think so. I think if there's a need for money, they're gonna put lots of money in the system to avoid any liquidity crunches. Once you have a liquidity crash, like in 2008, that was a problem. Geopolitical and external shock, number 3. You got Ukraine out there, you got Russia, you got China, you got Israel and Iran. That's possibility. Policy and central bank actions. I don't know. Let's see what happened this week. What the Fed decides to do. That could be a problem right there. How do you hedge against deflation risk? Long-term treasuries. That's what the problem that China has. China has a huge amount of deflation. 33 months of price decline. Why? Because they can't sell the stuff to anyone. They make so much things, they don't know who to sell it to. Number 5, market sentiment and psychology, panic selling. Right now, the market sentiment is Trump can do no wrong. We're king of the hill. This is going to be great. It's going to work out. No panic selling, no herd behavior, no speculation. And FOMO. What is FOMO? Fear of missing out. Number 6, structural issue. I don't think we have structural issue, poor corporate governance. I think the risk for stock market crash, you're talking about the geopolitical issue and the policy and central bank action. That's going to happen. But right now, no. So as far as your job is concerned, I wouldn't read too much about it. Go on vacation, have a good time. Why? Economy is doing great. Even though lots of people that don't particularly like the administration keep saying, recession is coming. Recession is coming. Unfortunately, the recession is only going to come, you know when? When people stop spending money. And people stop spending money when they basically feel that they don't have a job. And this is it. The recession is extremely important. I'll tell you why. The recession is extremely important. The economy is very important because right now, with the U.S. having $37 trillion worth of debt, as long as people are working and you're able to pay that debt, the risk is minimal, right? But one thing you don't want to have is $37 trillion and go into recession. Then the whole house comes down very quickly, very fast, and that's a problem. You don't want that to happen, right? You don't want to have a huge recession. Okay, well, how do I get a recession? Well, you get a recession when basically people, are not spending any money, when things are too expensive, right? But right now, people have jobs. In fact, there may be an issue with jobs is not enough people for the job because of immigration policy. A lot of people lost their jobs or had to leave the country, and frankly, there's not enough people to fill those jobs. So, and what do you think when van der Leyen made a deal with Trump and she said, I want to sell to the US, what do you find the next time positive? What do you think? Where do I find you next time, positive? Every day at 10 o'clock, I have a live. So subscribe to the channel, and I'll talk about each topic. And each topic it changes all the time, right? You need to explain. You need to explain Bitcoin. Bitcoin is like gold, basically, literally. In fact, what's happening, I don't know if you know, but gold is being gold is actually being put into the what we call money now. In the past, it was just dollars. And by the way, speaking of gold, did you know? So Trump basically did the inspection with Powell. Okay, Trump basically there's going to be dissent. Did you know that he wants to check how much gold there is at the Federal Reserve? I mean, that's a low blow. Let me double check. But I'm pretty sure that Trump is going to check how much gold, because no one has checked, is in the Federal Reserve in New York. This is a real issue. I mean, you gotta give it to the guy. He just doesn't give up. So I heard that he wants to see, yes, Donald Trump has publicly said that he plans to personally visit Fort Knox to verify that the U.S. gold reserve are still physically present. Likewise, Elon Musk and his newly structured Department government of they wanted to go in there. Secretary of Defense and Federal emphasized that annual. Okay, listen, this could be something. Treasury Secretary Stock Bessent emphasized that Fort Knox undergoes annual independent audits, and there have been no reported removal of the gold beyond purity testing. Technically, Fort Knox currently holds 400 metric tons of gold, roughly half of U.S. reserves. You want to check every conspiracy theory, then again, I do the same. I was POTUS. Be careful. I mean, is there? I mean, the reason it's important, believe it or not, is because gold cannot be replaced. You can't make any more gold, but dollars you could always print. Like a child counting the cookies. I mean, again, he's not there to count gold. He's out there to put pressure on Powell. I mean, think of it this way. I mean, look at the guy. I mean, I'm sure he's a nice, smart guy, but is he in control of everything? Is he managing all these people the way you think it is? No. He's very meek. In fact, he's starting to panic. I am sure there is something, there's definitely something off at the Fed enough to say, wow, besides the building. Maybe they don't want you to find out. Maybe they don't want people to know what's going on. Otherwise, it's going to be a problem. Otherwise, Black Swan and me, and do you pronounce Black Swan? Black Swan is basically, the idea of a black swan, okay, is that it's after a very famous writer who wrote a book basically called The Black Swan. And the Black Swan basically saying that 2007 was a black swan because we didn't think this was going to happen. It's all about fragility. And he also believes, Taleb Nassim, that basically you don't know anything. You get up in the morning and you don't know anything. You should never get up in the morning thinking that you know I understand everything. And we are, let me get a bit psychology here, but basically the human brain is structured in a way to make the same mistake over and over and over and over. Why do you think there are so many wars? Why do you think there are so many divorces? And these are big risks, obviously, in your life. Why do you think that is? Because you're wired to trying to avoid spending too much energy. Yeah, you're here to save energy all the time. You want to survive, right? If you have to make a decision, you're spending 3 days thinking about it, it's not worth it. So therefore, and this is in the book that Taleb Nassim wrote about fragility. And I mean, basically, what it means is that by definition, you're bound to make the same mistake. That's why we always have stock market crashes. Why? because there's overbearance in 2000. I remember, I was there in 2008 buying houses and selling houses, and people prices kept going up and up and up and up and up and up and up. And people said, well, it fumbled. I don't want to be left behind. Fear of missing out. And that's what's happening right now. And unfortunately, we make the same mistakes again. So that's why I think for my subscribers, what I would like is that you guys, before you make a decision, first of all, realize that you don't know anything to begin with. And especially in the environment that we're in. Now, don't forget, this environment that we're in could be a major disaster. If all of these risks that I've mentioned over and over and over, you need to understand them, right? You'll find out. If you don't understand these risks, then what's going to happen is you're going to be in big trouble. And of course, the likelihood that Trump is able to manage all of this for a continuous amount of time is impossible. What's going to happen, my friends, is that the risk is going to come out of left field, something that we haven't looked at. I don't know where it's going to come from, but it's going to come from left field. And we need to know what that is before quantum computing will break using Shor's algorithm, which can efficiently find a private key from a public key. Well, once quantum compute, and that's a risk, quite frankly. Once quantum computing comes along, forget about your password. That's all going to be gone. It's not a risk right now, quite frankly, but it's something to think about. You need to always make sure. It's like when you're crossing the street. You look left and right, right? The thing is, whenever you go on, maybe on social media, definitely, when I hear the things that I hear, the people that are recommending stocks, it's amazing. I mean, they even have Warren Buffett recommending his portfolio, and then I'm listening. But Warren Buffett never recommended anything. That's AI, so you have to be careful that, am I real? You have to be careful. Make sure that you know what you're listening to. What you want to do is sign up, subscribe to the channel, and we'll talk, because I will turn this into a podcast. One thing that you need to worry about is that it's not so much what you can do, but what you can avoid. But then you do that all the time, right? When you cross the street, what do you really want to do? Do you want to avoid being run over, or do you want to cross the street? What's your main goal? It's not to cross the street. It's not to be run over, right? Because you're looking left and right first, and you think about it, and you do all kind of thing, right? You subscribe, my friend. Where do I subscribe? Well, there's got to be a way for you to subscribe somewhere. You click on it, and boom, you're doing. And I'm going to have to let you go pretty soon anyway. That's what you need to do, right? So, and then that'll be my final words. Then I'll meet you tomorrow again. But basically, what's going to happen is you have to be very careful, because wherever you get your information, Wall Street Journal, yeah, lots of information, lots of news. Be careful. They're a little biased against Trump. But no one tells you about how much risk is out there. When you listen to Bloomberg, nobody tells you how much risk is out there. They give you the news. They tell these people, you should be buying stock, you should be doing this, you should be taking my portfolio. They don't tell you, first of all, that 80% of these people are always wrong. Only 20% of people beat the stock market. Yes. By the way, in my Patreon channel, which I should talk about more, quite frankly, I did lots of recommendation, and I do offer lots of advice on a daily basis, because I can't talk about it all the time, right? But I do in the morning give a couple of advice to people. I did actually make a recommendation on a couple of stocks, actually, and that are doing pretty well. Take a look at them. You'll see it's free. Not free forever. Free, I think we give you a week for free. And it's not that much money yet, but I think price is going to go up pretty soon. So when you look at all these places, Bloomberg, and no one tells you about the risk. Why? Because they don't want to talk about that. Otherwise, you're not going to listen to them. You're going to say, wow, what do you mean? This is risky to invest in the stock market? Yes, it is. Okay, so we'll see you tomorrow. We're going to talk about lots of issues we're going to deal next week. We're going to talk about, what are we going to talk about? Let me tell you before I let you go here. We're going to talk about the CPI, basically saying that's an important topic, because inflation is calculating the wrong way. The federal investigation with Jerome Powell, including looking for gold. Let's see what they found. Who is paying the tariffs? That's going to be interesting. What is Trump doing with the 550 billion that he's getting from Japan? We're going to have to have this thing with what is a real deal with the European deal that we just got, the tariff deal. Let's see. European stock versus US stocks. That's going to be an interesting one as well.